All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for April 14th, 2025. We are recording this at 7 p.m. Eastern Time, and this is episode number 473. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now, but you will be sharing the screens of our guests too at some point during the show. So today I arranged for Casey Stubbs and Harry Boxer to be our expert panel for today. And the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and thanks everybody for being here because we certainly are getting a lot of action lately, and it's nice to get a different viewpoints on how things are going and maybe some ways to take advantage of all this volatility because there's been plenty of it. And the tariff story always continues to change. You know, we had some certainty there for a little bit of a while, and then over Sunday they're starting to change the tune a little bit, and China's doing other things. So we definitely have ongoing changes on the tariff front. That's for sure. Before we get started, let's get into which way we think the S&P might be going because we had a nice drop, 6150 all the way down to 4800. So I'm going to start out with Casey Stubbs. And Casey, give us a little idea. You know, after this big drop we've had, how do you feel it's going to play out here in the next month or so,
All
or week or so,
right.
or week or so?
Well, we got a shorter week this week, so we might have some lighter activity. But
Mm-hmm.
I think if if you look at the way the chart is going, and I try to not pay too much attention to the news, to be honest, because it kind of makes me go a little bit crazy, and I
Yeah,
don't
sure.
like to be a little bit crazy. I'm crazy enough as it is.
Yeah.
It's just too much noise. So I'm just going by what I see on the chart. And so what I see on the chart is that the price is moving lower. It's broken the downward trend line. We're way below the 200 period moving average. We've had a 200 and a 50 cross. When you see that, it's a, definitely a bearish signal. So until we can break back up, I'm definitely looking at selling rallies, right? So we have some resistance up around the 540, 550 range, and we kind of got into that today a little bit, and it slowed down a lot. And so at this point, whenever we see prices moving up, I'm just going to be watching for stalling, looking to see how it holds up. And then if it drops, I'm going to be taking some short positions. And that's going to be the best way for me to try to generate revenue in this downward market.
Mm-hmm. Now, since you're doing mostly with the options here, are you keeping an eye on the VIX and can we see a chart on the VIX? Because
Okay,
I,
yeah,
Mhm.
it's definitely good to look at the VIX because the premiums are up, and so it's an elevated earnings position. However, with that being said, you've also, with elevated earnings, you've also got to always be managing your risk. Keeping an eye on risk is the most important thing. Yeah, it's nice to have increased premiums, but if you make mistakes and you're not paying attention to what you're doing, you can definitely have increased and elevated losses as well. And so you can see we had a big spike and now things are coming back down here. But it's just been the news has been crazy, which is one of the other reasons why I don't watch it. Just causes everything just to go really wild.
Mm. And that move in the VIX may have something to do with a lot of people who are short the put options and maybe the credit put spreads. And then obviously with that kind of drop in the market, they had to purchase all those back into an environment where there was nobody on the other side of the trade. So the market makers really goosed people, making them buy their puts back at an extremely large premium. Huh?
Yeah, that's one of the big risks that people take, and that's why I say keep your eyes on that risk at all times and never evaluate a trade based on how much you can make, but always like, okay, how can I protect my account and keep my risk in check? Because I'm a big believer in small trades.
Mm-hmm.
If you hit enough singles, it adds up and you're going to make money over the long haul. I'm trying to just be consistent and take a little bit each day, not hit massive home runs.
Yeah. And the VIX might be telling us something because that 30 high point back in March, it has come down towards that. So that might be a support. And if the VIX isn't going to get underneath 30, then it means there could be another decline happening. And then, of course, if it can't get underneath 25, that could also be a point where another decline could come from as well. Because it probably, to get a real more comfortable market, you may have to get down towards the gold line around 20 to get people to really think that the volatility is behind us for a while, huh?
Yeah, and I think that we're going to see that this week when we look at if it can overcome some of these resistance points in the market. And today it didn't show much. So if it tries again tomorrow, tries to break above 540, 550, that's going to be some very important levels. But personally, I'm not really expecting that to happen. I'm more in line with seeing that fade
Yeah.
at those levels.
Which would coincide with the 30 VIX area holding up and then becoming a higher VIX maybe.
Yeah, absolutely.
Harry, how are you feeling on the stock market now? I mean, we both talked about how if it broke 5,500, you could accelerate to the downside. Obviously, that's what did happen. And
Exactly.
then my thought was it was going to stop at 4,800 because that was the highs from 2022. So that was a coincidental number to stop at as well, you know?
Yeah, well, not just that. When you look at the length of the legs, if you're doing basic Elliott wave, five waves down, we have four, we have three down, one, and then this fourth wave up here. And notice, and I talked about this one last time, the double bottom. I said if that's broken, we could plunge. That's exactly what happened. Now
Mm-hmm.
that double bottom is big resistance. There's also a gap there. So just above where we are is that if you draw a line across those bottoms, across that one top of that gap right there, a little down, 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 down. No, no, up there. Draw a line right there across, and you'll see that it connects with the double bottom that was broken becomes a resistance level now, and that rally came right up to it, backed off. We're right back up against it again. This time on lower volume. So I do agree with Casey that we could see a pullback retrace or even a fifth wave down. Here's the thing. When I see a third leg like this, and it's a steep one with two consecutive huge gaps down on monster big volume considered, that's too far. That basically stretched the market out too far. If that leg down had stopped at around 5,200 and then bounced up towards 5,600, then I would have expected an immediate fifth wave down. What I think
Right.
is going to happen here, this market could stall in this range or run up to that where the moving averages are crossing over around 5,650 in that area
Right.
uh, and then come down to this area where we are now and form a right-handed extended V bottom type pattern. Then we go up, but we got to get to 57.90 where there's another line of resistance from the December low and then the March high. You can draw a line across that too, and you'll see there's also a gap there, right in there. Correct. So when the market broke that and rebounded right up to it and then rolled over, that's where the market caved. So there's a massive top formation, a breakdown, a moving average rollover, and a three waves down and a wave up. The reason why I'm not sure that even if we get a move down, it's going to be a fifth wave. It may be truncated or shortened, meaning that we could come down to 5,000, 5,200 in that range, in that zone, and form a right-handed extended V or a higher right leg, and then go back up. The key is going to be, though, obviously, taking out the spikes right in this range and filling that gap. So between 55 and 5,600 is massive overhead resistance right now.
Mm-hmm.
But and also consider the declining tops line from the peak in February to that rebound that failed. Draw a line right on an angle down across that, and you'll see what I'm talking about from that peak there, a little left, yeah, straight down to the next peak. No, no, down the other way, down to the right, there. That's it. You can see that we're coming up towards that, where there's a declining tops line, lateral price resistance, and a gap all at the same point, a juxtapositioning at the same point. So that's why that's going to be massive resistance. And if the market could get up through that, it can not only go to 5,650, it could go to 5,800 and then pull back down and form some sort of massive inverse head and shoulders. But I learned a long time ago, trade what you see, not what you think or what you expect. Because the
Right.
bottom line is the market will tell you what to do. And don't anticipate. Anticipating is the number one way to lose money and lose it fast.
Now, with regards to that gap, we're figuring that at around 55.20. Is that a decent number into
Between
that
50,
gap right there, and where
well,
the line comes down?
yeah, we filled, that's right. We filled that second gap with that big bar up on Wednesday of last week. But the one above that is like between 55.90 and 55.40 or something like that.
I
So,
got you there. Yep.
yeah,
Now I'm looking at it the right way.
right. So,
Now on this decline, how do you count it with Elliott wave? I mean, does it look like it could be a 1, 2, 3 down, and then we'll do five waves up, or is it still looking like it's five waves down?
that's a tough. I would say my personal preference is over my 55 years of experience is that if you look at the volume at the bottom there, heavy a climax volume, two
Right.
consecutive down gaps, a market plunge, that leg was too far too fast, and as a result, I think that there is not going to be a fifth leg. If there is a fifth leg, it could be massive down to 43 to 4,500. Okay, in other words, let's just first see if it comes down and takes out 48 to 49,900, that area where there's big support. Right now, I don't think, I got a feeling the market backs off towards 51, 5,200, forms the right-handed extended V, goes up and takes out the declining tops line and lateral resistance. And then you have a massive rally on your hands. The market climbs a wall of worry. Remember that. Joe Granville, 1965.
Right.
And I got to tell you that it's amazing to me how often when things are really, really bad, people are panicking and selling, and people are selling the rallies because they think it's going lower. But this may be like it was in COVID low,
Yeah.
a big spike down, a rally. Everybody thought, the market's going to pull back down and maybe go to a lower low. Even my buddies over at Elliott Wave Trader, Avi Gilbert, is looking for a massive wave down and maybe a generational bear market. I mean, I don't say he's not a perma bear. He's just very bearish here. Until we get
So
below
is
that,
his gut feeling is that we have made a turn, and now we're in the process of maybe going down towards 3,500 or 4,500 or something like that?
that's correct. He's looking in the threes.
Yeah, well, if you do basic math, the earnings were 270 on the S&P times 23 is 6,200. We topped at 6,150. Now, if those earnings came down to what, 200 or 225, and you multiply it now by 17 or 19 because the multiple shrinks, the 3,000 numbers are just basic math at that point.
Well, the one thing you want to look at, thank you for this long-term chart because it brings to mind the following. Look at the peak in July of 21, okay? And draw a line straight across that. The peak in July of 21, over to the right. Right, keep going right there. Now draw a line straight across. And look where it is. A little bit, a little high. Actually, it's not quite a parallel angle. There you go. So not only is there a 200-day moving average there, but there's a lateral price support from the prior high back a couple of years ago. In the long-term chart, also draw a line from the low in 2020, the low in 2020, connect the low in July of 22, and then keep going, and there you go. It's perfect. There's a triple support level there. 200-day moving average, lateral price support from the prior high, and the trend line. Now, if the market breaks that, that's when you get the plunge down to 4,000, 3,500, etc. Until we
Right.
do that, we've only got a COVID type pullback.
Yeah.
And also look at the relative strength, the oscillators, the VIX, everything was so extended, the market had to bounce. The question is, what now?
Mhm.
And we're up against resistance. I think the next few days are going to tell us a lot about not only where we're going short term and maybe even intermediate term.
Yeah,
Yeah.
Harry, can I jump in and ask a question? You notice on that longer term chart, you've got the 50 EMA, and in 22, when price moved below that, and you can also see it on the daily on the 200, we had a very extended period, and it wasn't really a downward move, but it was kind of like down and sideways, and it took a good part of a year and a half before we bumped
Except
back up.
except for one thing, Casey, you didn't get the severe drop and plunge on a steep angle like that. That happened in COVID.
Right,
Notice what happened at the COVID bottom, straight up for a year.
right.
I'm not saying that's going to happen here, but if we don't break down and we take out the moving averages to the upside, everyone is going to get squeezed and the market's going to go through the roof. And you may even my buddy Avi, who's an Elliott Wave guy, said there may be one more major rally before the market tops. He's looking at 6,500. 63.50 in that range. And it could happen, but we'll know a lot more of this in the next week to 10 days. Because if the market can't get through the moving averages, it can't get through lateral price resistance and the gap that it's at right now, then it could roll over into a fifth wave. And if that fifth wave takes out 4,800, it could get exacerbated dramatically. And then you're going to see a VIX that you don't remember this, but back in 2008, the VIX was 84. Now, I'm not saying we're going to 84, but we hit 60 this week. That's severe. And so I'm thinking too many things happen too far, too fast. The market has a chance of putting in a COVID type bottom. That's a spike down and a spike up. Now, I'm not being bullish. I'm just telling you, notice how in the COVID days, it went right back up above that, the green line, which is, I think, the 50, right?
The chart looks really similar. I mean, if you look at it looks very similar.
And look at the RSI. It went down below that zero line. It did that in COVID too, a little steeper in COVID. But the bottom line is, don't get too bearish too quickly. And I wouldn't be a seller. I wouldn't be a seller on rallies, and I definitely would not buy puts just yet.
Yeah, the unemployment rate, if it doesn't go up, if the tariffs get resolved by the end of June, and we start looking at deregulation, tax cuts, debt ceiling being raised, you could have a totally different tune the second half of the year.
Totally.
And then rather than earnings falling out of bed, people just pay more money, and they've done it before. So, put 10% on people's stuff. I think most people, as long as they're working, would probably still pony up the money, right?
Well, I saw something from a very brilliant guy, not a technical analyst, a fundamentalist. He said, are you aware of the fundamental devaluation in terms of price earnings ratios on the NASDAQ 100 generals, the Mag 7? They've dropped from 30-40 to 1 down into the 20s again, and some of them high teens. So, yeah. I mean, they've become much more reasonably priced. And that's why if you look at bring up a chart in NVIDIA. I want to show you something. Now take a look at that. Now that could be a massive head and shoulders, but it's already had 5 waves down from the top. 1, 2, 3, 4, 5 waves down. And that fifth wave is right there where there's support laterally from back in March, April, May, back then. So, and if it can get back above 121, you'll take out that prior peak. You'll take out the declining tops line. You'll take out both moving averages, and then you're on your way back to 140.50 again. And that's when everybody gets squeezed. I'm seriously looking at NVDX and NVDL. Those are two ETFs that are 2 times NVIDIA. Look at those two charts, NVDX, NVDL. The little one, NVDX, is a cheapie, and it's already dropped from 21 down into the 4 or 5 range before bouncing. I think if NVIDIA turns around, this is going back to 12. This could be a 40-50% in the next couple of weeks if NVIDIA rallies. We'll see.
Yeah.
Casey. Yeah, go ahead. And NVDL is the other one. Same chart, higher price stock, same pattern. If it gets to 49, it could fly. And my targets would be 60 and 68. So, and right now it's trading what, 36? Again, you got to take advantage of spike lows and make sure that when the stock's at a previous low, that you have room to run. This has a lot of room to run, and it's already had 5 waves down from the peak. Massive top, multiple tops up in the 88, 90 range, and all the way back down to the low 20s.
Casey, I wanted to ask you, Bitcoin. Do you have an opinion on it? If you do any Bitcoin trading, what's your instrument of choice?
Yes, I do really like Bitcoin. I think it's a great instrument to trade, and right now it's moving very similar to the S&P. I mean, they're pretty correlated. It's below the 200 moving average. So if you look at Bitcoin, we've had a pretty nice pullback. We're trading at 84,000 right now. It's in a kind of, it's below the 200 and it's in a sideways pattern. It's been there for a while.
It better not fail here.
Well, yeah. I mean, if Bitcoin, I'm one of the guys that if Bitcoin fails, I'm okay with it because I just keep buying. I've been stacking my Bitcoin for a while. A couple of years ago, dropped down to like 17,000, and that was really wonderful. And a few years before that, it went to 3,000, and that was really wonderful. But it's holding up pretty nice. That's a good weekly chart right there. It's holding up pretty nice on the 50. It's in a sideways range, and I'm really watching it. I think it could break out. We could go back up to 100,000, break 100,000. If the S&P has a good year, I could actually see Bitcoin hitting 200, 250,000, and I wouldn't think twice about that.
And what's your instrument of choice to do it? Is it the actual Bitcoin? Is it?
Yeah, it's definitely Bitcoin itself. It's pretty simple nowadays to get a hold of. Um, I haven't actually messed much with the ETFs. Every once in a while, I could do an ETF or maybe a Bitcoin, like a Bitcoin mining company.
Right.
I'd take a look at a few of those, but for the most part, just loading up on Bitcoin has always been a good investment over the course of the lifetime of Bitcoin's been very high returns.
And I am not that familiar with the actual having a wallet or anything like that. Do they have fractional Bitcoin? Because at 85 grand a throw,
You have to buy two to get started.
you do?
No, I'm joking.
I was gonna say, you got to
Pony
sell
it
your
up,
house to get
buddy.
started.
Pony it up. No, yeah, no, you could buy like $2 worth of Bitcoin and you get 0.000001
I got you.
Bitcoin. Yeah.
I got you. So it's kind of like they do with the fractional shares of the stock market at Schwab. I guess you can buy a slice of Amazon, rather than 100 shares or something. Harry, your feelings on the Bitcoin? What are you thinking?
Dangerous.
Hmm.
Let me tell you my look. I'm not a believer in Bitcoin at all. Do I trade it? Of course, not Bitcoin, but I love CONL. That's Coinbase's ETF, and I also love Mara, MARA. I've been trading that for years. But when you look at this, if you look at this, the short term, yeah, that's a longer term chart. But when you look at both of these, they are extremely oversold, and they're actually below support. But on an intraday basis, every day, they'll break out of base patterns and give you a nice day trade. That, of course, I'm looking at it on a very short-term basis. Also, look at the waves: 1, 2, 3, 4, and it's actually 5 waves down. I think Bitcoin, the market, and all the related stocks and ETFs are oversold. Do I think there's room to run? Again, if you look at this one, it's a down channel. It's below the moving averages. Until I see a lateral price, at least the prior high taken out, I wouldn't touch any of these on a more than an intraday basis. Okay. But I want to go back to Bitcoin itself. If you see that chart of Bitcoin, the thing that bothers me the most about it is when I saw the S&P rolling over, there's a double top there, and there's a line of support at 90,000. I told everybody if it breaks 90, snaps back to it, it fails, it's going lower. That's exactly what happened. We're in a down channel. We're at two moving averages, 50, and this is either a positive golden cross or it's going to die right here. And if it dies right here, we're going down to 65, 75 area. That's my take on Bitcoin. It hasn't shown me enough of a bottoming type action to tell me that this is a bottom. Each time we made a lower, it was a lower low, and a high, a lower high. We're still in a downtrend until and if we break out here. If we get up above 89,000, we got a good shot at doing 94, 99, and then 105 to 108 again. If you go back to that weekly chart that Casey was looking at before, I want to point one thing out to you that is positive. Yeah.
It's hanging in there, hanging on the blue.
Right, but coming off of the July bottom, after coming down from 60 for some odd thousand down to 17,000, then we have 1, 2, 3, 4 waves. If it holds here above those tops, and if you draw a line across 68,000 in that range from all the way back to 21, you'll see there's a line that goes straight across, and we've kind of come down near it, 72,000. My take is above the tops there. Yeah. My take is that this is the fourth wave down to support. If it holds it here, now I'm talking about, that's, you can see the rising channel there, right? Yeah, that's it. So I'm thinking 1, 2, 3, 4. If we hold here and break out above 89,000, we have not only a shot at going to 108 again, but extrapolate 120, 122, 125, something like that is my fifth wave top target eventually, if this channel holds. If the channel doesn't hold, we'll probably come down to the 200-day near 50,000, believe it or not. That's my take.
Yeah. Let's put up MicroStrategy,
MSTR.
the Ferrari of Bitcoin, in my view,
Yeah, I like
because
trading
it looks
MS.
to me if it gets above 350, it's going to go up like a rocket. So,
Jim, you could also look at MSTX, their ETF, which
well,
is
this one
cheaper.
here is my favorite because I bought it at 150 and it went to 550, and now it's come all the way back down to
Well,
250, and it's time to take another bite of the apple because, like I say, if it takes out 350, I don't have to ask anybody what it, and you'll need 92 grand or better on the Bitcoin, but 92 grand or better, can happen. So if those two things happen, I think this is where a limited risk option going out to December, you got a home run or you got a limited loss.
that
That's
looks
all you
pretty
got.
good. Can you
Yeah.
put up MSTX real quick?
Yeah. We'll look at that. Now, what is this one? I like. Oh, this is MSTR with 2 times leverage.
Right.
Oh, yeah, sure. Why not?
Yeah,
That's like
double
Let's
double
go
the
that's
in a
like
little
fun.
closer. Let's
a
go in a little
double
closer.
shot tequila. Who would want a double shot tequila? You know what I mean?
I would wait for over 39, and it not only breaks the moving average, but the prior high.
Yeah.
Then you got a good shot at going to 60. So there's a lot of room to run, but I'd want to see that move first.
Yeah.
Because right now we're below that moving average, and
Yeah.
it could run right up to it just like it did the prior time and roll
Yep.
over and make a lower low. So I'm not sure about MSTX, MSTR, or Bitcoin or any of that until I see what I want to see. Bitcoin, as you know, is right up against the moving averages. We just saw it, and if it
Yep.
fails here, it's going to get ugly.
And this could coincide with the noise on the stock market turning with deregulation and the tax cuts and the debt ceiling, and happy days are here again. Because the tariff thing is off the front page of the news,
Yep.
and that's why they came up maybe with that 90-day thing. If you notice, 90 days is April, May, and June. So they want this thing off the front page by June. That's why they put the 90 days on there.
Yep. That's
So,
good thought.
it makes a lot of sense that Bitcoin second half of the year, stock market second half of the year could be a lot better, unless they get Navarro in there going nuts and they get really aggressive and they disrupt. But between Besant and Lutnick, maybe that won't happen.
I know there's a lot of people in Bitcoin, but I got to tell you, some very smart people I know. Every time I talk to them about Bitcoin, they come up with one word: tulips.
Yeah,
You
yeah.
know what I'm talking about?
Yeah, no, the reason they're like that is because, who backs the thing? Nobody. If there's malfeasance, who do you go to? There's no FDIC, you know what I mean? So the people it's a product that's outside of anyone's experience. And
So,
so,
I would not be shocked if it collapsed completely at one point.
Harry, tell me a little bit more about the whole tulips thing.
oh yeah,
Oh, well, back in the 1500s, that big Dutch trading company, I forgot what it's called, which was the biggest trader in the world, were we're selling tulips were like gold and even more expensive. The price of tulips went from $1 or $2 each to about $500 each, and it was one of those blow off, ridiculous, spike up for no reason. Nobody knows why. Everybody was buying it, and it fell apart. And I'm just saying, I'm not saying Bitcoin's going to do that because there's a lot of really smart people in it, but at the same time, there's a lot of smart people who every time I talk to them, they go, "I don't get it."
it is hard. It
Well,
is hard to get because
well,
it's not a usual thing.
that does make some sense, but if you look at some of the stuff that goes in behind it is, you got people that spent, billions of dollars on warehouses, and they have an entire warehouse full of computers, high-tech supercomputers where they're paying all this electricity, and they're mining it day in and day out. And it's kind of like, if you look at fiat money, you just push a button and it's created. Whereas Bitcoin, you actually have to mine it. It takes money, just like if you're digging for gold, right? You got to mine it. It takes electricity and time and effort and energy. It's not something that just like the Fed pushing a button and creating instant money. So a lot of people have put a lot of sweat, blood, and tears into this. And the other thing I would say about tulips is that that was a relatively quick crash. It was up and down,
Oh yeah.
and this is going on 16 years.
Maybe the eggs is the better story for the tulips, huh? The eggs.
Right, except for one thing, it doesn't matter if it's been around 16 years. It's the spike up. It's just like silver that went from 4 to 50 when the Hunt brothers were manipulating it, and then
Yeah.
it ended up going back to 4 again. It's kind of like
Right.
we see so many stock. Look at Tilray, the cannabis company. The stock went vertical from 10 to 300, and now it's like $1.50. And there's a
And that's going
thousand
to be
stories.
dead forever, you know? And just like the
Probably.
tulips, those will be dead. So it
Well,
could happen with Bitcoin too, because there is nothing behind it, especially with you got companies like, MicroStrategy trying to manipulate it. But I think there's just too many people on board now. You got all the big hedge funds, you got, I mean, all the people that are mining it. Just there's a lot of
And
believers.
and BlackRock, Larry Fink of BlackRock now has a new model portfolio: 50% stock, 30% bonds, and 30% in alternatives. And that means private equity and commodities, and also Bitcoin. So they used to. I think Tom Lee said if only 2% or 3% of all portfolios were diversified into it, it might go up 10 times in value. So
Hey, by the way,
it,
Jim, for kicks and giggles, can you go back further on Tilray? I want to show you that spike to 300. See it there?
there it
That's
is.
it did two big spikes.
The
Yeah.
space
Yeah.
needle.
It's
Yeah.
That's when
Can you
everyone
believe
it's
thought
it?
pot
so
was going to be
bad.
on every corner,
I
right?
just can't get over that the industry leader, CGC, is which was by far the biggest company in the industry, and Constellation Brands took a big position in it. Went up
Yeah,
to
yeah,
went up to 58 or 60 and it's trading at $1 again. So
yeah.
it's amazing. Unbelievable.
That Constellation getting into Tilray might be how all of these funds in Bitcoin would work out if obviously Bitcoin didn't continue. There'd be a lot of people holding the bag. But
I
let's turn to a different thing that's a big thing right now is obviously the price of gold. Went up to 3,200 and
overbought.
yeah,
Warning, danger.
yeah, no, it's overbought. There's no doubt about it. But
Well, also, it's look how far away it is from the 50-day moving average.
no, it's ridiculous. Yeah.
Okay, I've told everybody that when it broke out across 2100, 2200, if you go back to the last chart you just had up.
That's a good one too. You got a divergence.
Yeah,
That's a weekly chart though.
yeah, that's probably weekly. You got a daily?
Yeah,
Yeah,
that's a good one.
yeah, you can see that. See the triple top in July of 20. It's like July of 2020, and then there's one a year later in July at the end of 22. Yeah, and then there's another one there. There's a triple top there. When it broke out and then pulled back to the moving average and formed a little wedge and then started to move around 2100, that's where I put it out to my people. I said this thing could take off. I didn't think it was going to 3,400. I had a target of 2,800 and it went there. But if you look at the also at LA wave, there's another thing to consider. Breaking across that line, 1, 2, 3, 4, 5 waves up. And the fifth wave, when you see a fifth wave spike up and it gets crowded with heavy volume, it's absolutely a selling point. Top of the fifth wave on heavy volume. And yeah, that, no question. I told everybody stay away from gold and silver. And the reason silver, it's really, really trailing. And that's another thing. We're not getting confirmation from silver. Usually silver and gold run together. Take a look at the double top in silver. Gold made a higher high. Silver not only did not make a higher high, it came down to test the lows and it's below the moving average. Well, I think it bounced above it today. But the bottom line is, I'm not thrilled on precious metals at all. Not now. I mean, I was, earlier in the year.
No, I mean, it's not a position to start saying, I think I'll start buying up here because your stop loss would have to be 200 points underneath. You know what I mean?
That's exactly right.
Yeah. But, like I say, a reversion to the mean is going to happen, but there's no evidence of that occurring just yet.
There's certain gold stocks I really like. If you put out AU, for example, the Anglo Gold Ashanti, South African gold miner, take a look
Nice
at the
one.
rounding. Look at that rounding base pattern. It's a beauty. You can go back
Yeah.
again, and then the breakout. But look, this is also a blow off fifth wave after like a rounding shoulder, rounding bottom, inverse head and shoulder. But it may, if it comes down to $35, $36 range from where it is now, it might be a great buy. And
Yeah.
right now it's too extended. 22 to 42 in a gold stock in about a month.
Yeah, they
Harry,
all revert to the mean at some point.
Yeah.
Harry, I wanted to ask a question because you've been mentioning the waves and the points. How do you count your points on the waves? Is it like each time it makes a new high, that's considered a wave?
Well, but it has to be a substantial pullback. You can't call it a wave if it pulls back for a day or two and goes up again. That is still part of the first wave. But can we go in a little closer on this one? I'll show you what I mean. Yeah. So at the bottom there in November, December, right there, to that leg up there, if you measure that move approximately, and then go to the bottom pullback low and measure the move up to that next peak, it's close. It's a little short. But look at the pullback. It's about the same pullback in terms of length as that prior pullback. And it held at the moving average. Also held near the prior high. So to me, it was a 1, 2, 3, 4, and the fifth wave was coming. I wouldn't have expected it to be that kind of a blow-off high. But nevertheless, it went from 32 to 42 and a half, 10 points vertically in a week. That's why to me, it's a blow-off fifth wave. That's what I call it.
No,
Also,
so
you
when
got
I'm looking
also
at
you have a gap there, and I call that an exhaustion gap.
when I'm looking at it, I see two tops, and this is the third top.
That's right. Fifth
So
wave, though.
so this would be the fourth wave?
No, one up, two down, three up, four down, five up.
Oh, so you're counting the bottoms. Okay.
Yeah, you
So
have to
so
count
that was
every
so
wave. You got to count each wave, up waves and down waves.
okay, and then you're saying that this move is done and it will start to reverse, and so anytime there's an uptrend, you're looking for just five waves?
Yes, but you can't necessarily. Okay, let's put it this way. If I see this move, I'm immediately selling half my position and putting a stop in because it could sit there and consolidate for a few days and get one more spike into the mid to high 40s. It may not be done. When you get a blow off high, you just don't know how far they can take it. Rule number one in stocks, they always go further than you think they're going to go up and down. Same thing with the market. This is why, although for me, when I see historically the moves the stock has made, and suddenly it goes 10 points in a week, and look at the volume on the bottom, pretty heavy. And it's also, when you look at the RSI, it's above, 70. It's just too much, too far, too fast. Gold,
Yeah. Plus
I
there's
saw,
divergence on that RSI plus a volume spike.
that's exactly right.
What are you guys thinking about this energy market? Crude broke under 60 last week, hit about 54, 55, bounced back up here. But Goldman is still looking for weaker prices. Some people say there's going to be a 40 handle on it sometime this year or next. That certainly would maybe
Let's
be
go back to
problematic for the big oils.
Jim. Let's go back in time just a little. I want to show you
Sure,
something.
sure.
Okay. Massive spike in 21. Look at that run. Oil goes from, I remember when they were giving it, they were paying you to take it.
Right.
Remember that?
Yeah, in COVID, minus 37.
Right. And so it went from minus whatever it was and blew off to 130. That's amazing to me. Okay. In 2 years. But came down, went sideways for a year trying to build a base, and then it broke it. If you look at the lows in July, August, September of 21, and you draw a line across, straight across, you'll see we're at a critical level here. If we break here, yeah, we can go to 45.50. Right there. Right there. So, and actually go up just a little more. Right there. Take a look at the prior highs too, back in 2019 and 20. See that double top there?
Yes.
It came down to it a couple times. It came down, it came down, and right now we actually pierced that slightly and bounced. If it fails here, I could see this going down to 40, 41 in that range. That's my next target.
How do you feel, Casey?
Yeah, well, if you look at that support level that got broke, it was a pretty strong floor.
Going back 5 years.
Around yeah, well, just that big chart, if you move your crosshair up, you can see that was pretty, it's pretty heavy support. It's been up there for a while. So right now we had that big spike to the downside and it's been consolidating. And so if we see prices fail more, I completely agree. It's got to break out of the bottom there. If it breaks out of that bottom, I think it's definitely got a chance to go to 50. And once it gets 50, we'll see what happens from there.
Yeah.
The problem is when you have a multi-year consolidation base or support level that breaks, it's going to be very difficult to get back through it. If it doesn't get back through it, and the odds are 2-1 against it breaking out, but the odds are much better about it breaking down in at least a mini fifth wave from here. If you take a look at the action last month, we came down 1, 2, 3, and we're bouncing. If you go in really close, you'll see it.
So at
Yeah.
this point, you guys would say the chances of getting above 70 is nil, and the axe is just waiting to fall again.
And 60, 65, 66 is going to be tough to get through.
Yeah. Yeah. Be interesting because 40 on crude would certainly make the gas station a lot cheaper, and of course that helps the consumer, and that would feed into the idea that the second half might be quite different as long as unemployment stays moderate, and people get money and they have extra money because gas is down, and then all of a sudden they get a little tax break here or there, and the tariffs are off the front page. It's weird how the world can change. I mean, we were at 6,100 not that long ago, and when I was trying to tell people it might drop to 4,800, there was no takers, and there's no takers of it going above the highs of 6,100 this year right now. Not many anyway.
Well, I'll tell you what, if oil breaks from here, you're going to see a lot of these intermediate to smaller oil company stocks be cut in half, if not worse.
Yeah, I read that they're abandoning the rigs. The rigs, they're just abandoning the rigs, and they're refusing to pump at these levels. So it's definitely getting a little wild out there. The two things that are very big from last week was the value of the dollar and the interest rate of the 10-year and the 30-year. There's a thing going on that obviously if there's less trade, there'll be less need to have dollar assets. And so basically we had not much of a bid in the open markets on the bonds, which made the yield jump over 5% temporarily. And then that dollar has already gone from 110 down to 100. So if we can look at the dollar and the 10-year yield, get some opinions on that, because, I think,
very similar to oil. Slight breakdown, trying to hold. If the dollar hold, go back a little bit further in time. Take a look at this chart. And I have never seen this. I don't follow this at all. But look at all the lows in this area. It's very similar to oil, where it had that massive support level. And if that breaks, the dollar and oil and the market could all fall apart at the same time.
Yeah, and I think that would also coincide maybe with the stock market moving up, though, if the dollar goes down. Take a look at the further outlook on that. Like go to like a weekly time frame, because this is pretty interesting. If you zoom out on the dollar, you can see that it's just barely hanging on. And if it does break, it definitely could be a total trend reversal, change the cycle, and move down for a considerable period of time.
The dollar could get down to 90 again.
Yeah, that would be it if they throw the towel in on it. What about that 10-year note? We have a chart on that, TNX or whatever the 10-year note looks like on.
Yep. Well, it looks toppy to me, or it's a consolidation. At least it's above the moving average now, both of them. But if I was to bet, because the RSI is only at 50, this is not overbought. This could be can we get into it like a 15-minute chart or something on this? Yeah, or hourly, whatever. Yeah, you see this pattern until I see it break down under the 4.3. I think we can go to 4.7. That would be one big wave. 1, 2, 3, 4, 5 waves up too.
Mm-hmm.
Let me also point out something, Casey. Look at the first wave. To me, it's 5 waves within the first wave. 1, 2, 3, 4, 5. Do you see it?
Is the first wave below the moving averages?
Yes,
like
yes. Down, right there, right there.
Okay,
right.
yeah.
So go up one, and pull back a little, and that's 2. And then another little wave, and that's 3. And now pull it back down, and this is 5. So that's the dangerous part about this whole move. And now that it's below the moving average, if it should drop down below 4.3 or so, it can start to fade into the $4.1. But again, it's not something I ever trade. So
this is 5 waves. So based off of that, with the wave theory, it doesn't usually go to 7 waves.
Rarely. Well, let's put it this way. If after a 5th wave, I always tell, and here's a rule of thumb. The fifth wave consolidation, even if it looks bullish, is always less reliable. In the case of a bullish phase, a continuation pattern like a flag or a wedge or something like that will always be a continuation pattern, and the trend will go further up. In other words, it's a pause that refreshes. Just like that first leg up, you saw that little flag after it. The second one was more of a falling wedge. Nevertheless, the fifth wave up um, has, to me, peaked. And notice the negative divergence in the RSI, that we made a lower high while the stock was making a higher high. That's dangerous too. Now,
Right.
the one thing,
Yes, I see that.
so if we bounce from 4.4 to 4.48 or so, and we still don't have much of a move up in the RSI, we could roll over. It's a dangerous pattern to me. But you know
Got
what?
it.
Again, you don't want to anticipate, because sometimes they do get a fifth, sixth, sixth and seventh wave.
Hmm. As we come into the last 15 minutes or so, I would like to have you guys have an opportunity to show some of the things that you kind of help people with, and maybe some techniques of trading that you use. So, Casey, do you want to share the screen, Case, or just use the screen we have and kind of explain some of the things that you try to do to help people,
Yeah,
or trade,
sure.
or trade you like, either one?
Yeah, go ahead and pull up. Let's see. How about one of the stocks I've been looking at was SOFI.
Yep, I know it well.
SoFi.
Yeah. Okay, go to there you go. So, this has been moving lower in conjunction with what's been happening with the S&P 500. If you take a look, uh we're down below the 200, we're below the 50, but one of the things that I like to do is create income off of stocks that I like, and this is one of them. And so what I would do is I would sell cash secured puts when we get a spike to the downside. And so I sold one earlier, few when it got around 950. Uh, if the price stays above 950, you get to keep your income. If it doesn't, then you buy the shares, and at 950, it's $950 for one contract. And
Yeah, Casey, that's a pretty interesting chart. You got a very high reward potential on this one, because take a look, 5 waves down.
okay, I
The
was going to
fifth wave,
mention the waves, but I don't know much about it. But I'm
it's not, you got
since you
five,
talked about it, I love looking at them now.
you got 5 waves down. Notice that the RSI made a slightly higher low while the stock was making a lower low. It was
Right,
positively divergent. It turned around on big volume, and there's a lot of room to run in this one. Probably, I would say 12 and a half in that area where the moving average is and where the prior high was would be a good first target. And then
right. And
beyond that,
if we get, I do like this stock too because it's in my opinion, it's a disruption type stock, kind of like disrupting traditional banking, which I think is over. It needs to be disrupted, to be honest.
isn't that the student loan company?
It's not a student loan. Well, I think they might do student loans, but they're a loaning, but they're also a banking platform, and it's like really good for. It's kind of like what Robinhood did with trading. They just make it so easy. You jump on your app. People are tired of dealing with banks because their stuff is so old. The computers are old, the systems are old, everything's old. They're dinosaurs. So this is an up and coming new thing, and the young people are really jumping on board. They're getting a lot of members, and I think they've got a lot of room. I think they could have a lot of growth. It's definitely a growth opportunity, but even if it goes
Something.
back from 10 to 18, it's pretty good. You could almost double your money.
Well, I think getting through 14 is going to be tough, because if you look at the low in 25 on the pullback, it was right around 13 and a half. And this last rally was 13.75 before it dropped. So but you draw a line across there, that's your lateral resistance. It's also about a 0.375 fib retracement of the entire down move. So likely, if I'm giving you targets on this one, it's 12, 12 and a half, and then 13.75. That's where I would probably look to see it pull back towards 12 again and maybe form a base. But yeah,
Right.
that's a good one.
Yeah, and I agree with that. And I know that you do a lot of the day trading and short-term stuff. So you're probably only looking for one leg, whereas I might be looking for a little bit more. And plus, if I can sell the option on this and sell it every week or every 2 weeks and catch a move, then I'm pretty happy with that. And that's what I teach people to do. It's like, okay, we're going to try to make one option trade a week, just get that income, grow our accounts with one income trade at a time.
Yeah, but like I said, based on what I'm seeing on this chart alone, your timing was perfect. And I think those are going to expire worthless.
Yeah, let's go.
Harry, do you have anything on your radar you'd like to share?
Yeah, how do I get this? Let's see, where do we share again?
You should be able to now.
Okay. Let's see, where's that chart? This should be it. Oh, nope, it's the one there. Okay, got it. You should see a chart on MP Materials. Do you have that in front of you?
I
do
see
now.
it.
Yes.
Okay. Now this is a stock, by the way, this is the #2 company in the world. Actually, it's the #1 company in the world behind China, providing rare earth. And it's an American company, MP Materials. One of the things that we with the tariffs and with Trump's opinion about putting tariffs on rare earth materials and stuff. And by the way, now we're negotiating with Ukraine for rare earth mining rights. This stock for years has been, take a look, 2022, double top in the 60 range. And it took 3 years, but it went all the way down to under 10. And on the 10th bottom there, that one spiked down, and then it turned around and went up. When it crossed the declining tops line in about a year ago in October, well, you can see where it was trading about 16. That's where it really ran up, blew up, formed an island reversal almost, and then came down. When it broke back out in January of this year, I put a buy on it at 19.5 on that spike in early January with volume. A little pullback for an entry opportunity around 19.25.30, and you can see it ran up to the high 20s, pulled back, held support, held the trend line perfectly. And now today, monster breakout on only 24 million shares, which is one of the biggest volumes ever on an update for that stock. It is the biggest volume ever traded since it went public on an update, and it's on a breakout day. I think the stock is headed up probably towards 37. So from 29 to 37 might be a nice swing trade. That's just, the way we trade it out. P.S. This is not only a swing trade at the tech trader, it was a day trade today. Take a look at this. So when the stock popped, it formed a little wedge. I put a buy on it right there. It ran up to resistance and backed off and formed another coil. Net. This is the pattern intraday. This is a 1-minute chart. An ascending bull coil. I told everybody if it breaks out over 28.5, 28, look for near 30. 29.90 was my target. We had 29.85. And this is still going after hours. So that's an intraday chart, 1-minute day trade. This is a swing trade. And you can see, if you're looking at waves, 1, 2, 3, 4, fifth wave started today. It'll probably go up into the mid to high 30s.
You do anything with the quantums now? Rigetti or D-Wave? Have they gotten to a point where you'd take another bite out of those? Or
no? I'll tell you what, they were. I had 2 swing trades on QUBT. Here, I brought it right when it broke out here and went vertical in 3 days. And we went literally from like 7 or 8 into the mid 20s. That was a great trade for my group. But what happened there? 1, 2, 3, 4, 5. To me, that was 5 waves up. Look at the heavy volume on the 5th wave. We sold it right up in that range, and you see where it is now. I'm not buying this stock until it breaks out back above 9.25, because at that point, it'll probably be 10, 11, 12, 13, 14 again. So I'm a big believer in pay up, buy high and sell higher, meaning you got to pay up and make sure the stock is in the right configuration and in the right trend. I don't want to anticipate it here, because if it fails here, it takes out the lows, you'd have to stop at number 1 under 590. So it's a point loss if it doesn't work. So why not just wait for it to go over 9.5 and enjoy the ride? And that's QUBT. QBTS is a little better because it's showing it made a little higher high and it pulled back and made a higher low. So if you look at the two, compare the two, better chart here. You mentioned Rigetti. This is a really intriguing chart. A long coil. We made money on this stock right there when it broke out at 5 and change.
Mm-hmm.
Of course, it ran to 21, and that was a beautiful 1 month for
Mm-hmm.
us. 1, 2, 3, 4, 5 waves down and a coil. Keep an eye on this stock because any move above, and look how it got up to the 50-day moving average, it failed. I'm going to wait for the stock to make a move across there with volume. That's another thing. Everyone looks at price only. It has to have a price plus volume surge. If both of them are running at the same time, you have sponsorship and you're able to, have liquidity and be able to trade it much more, profitable, I think. So my targets are going to be 11 3/4 and 14. It's now 883. So actually looking at this now, Jim, if this
Yeah.
thing breaks above 9 3/4, I'm putting a swing on it.
Yeah. They both have heavy short interest. And just close out that idea of short interest. Can you put IWM up there? It's 26% short interest. I mean, it's a real dog, but there are people like Tom Lee and others who say that this dog will have its day. Maybe the
Yeah,
second half of the year, maybe second half of the year. I don't know. What do you think?
are you talking about the IWM, the Russell
Yeah, yeah,
ETF?
the small caps, the small caps.
Okay. Let me tell you something that you may not be aware of. This is the biggest divergence in 35 years
Yeah.
between large caps and small caps ever.
Hmm.
35 years. You go way back to like 1990, that there was never as much of a divergence. I think there's some small caps out there that are ready to rock. I have a personal position in two $1 stocks that I think are 5 to 10 next year. I can show them to you if you want.
Or when people join your club, they'll be able to find out as well.
MLSS. Look at the basic.
MLSS. All right.
They have a new epidural device that's much more reliable than anything on the market, and it's first becoming um, popular with a lot of these pain clinics.
Right.
But there's a lot of other things going on here. But look at this run. I had it when it ran here from about under $1 to 4 and change. It came down hard and a 1, 2, 3, 4, 5 wave decline, bounced, retested, bounced again and retested. It's forming a 3-year base pattern, which can support a big move. I'm of the opinion we go back to 4 and then we go to 7, 8. Something to watch.
Perfect. Casey, can you tell people how they can get a hold of you? And if you had any special offers, do you want to extend them at this time?
Well, they can go to my website, which is freedomincomeoptions.com. And if they want to check out a special offer, I've got an offer right there on the homepage.
Perfect. Perfect. And Harry, get a hold of you and explain a little bit about that room.
Yeah, well, our room is a very popular day trading site. If I can screen share, hold on. Right, there's my website, and that's me. And I'm a big believer that people just chase stocks all around the place. That if you want to stop chasing stocks and access the ultimate technical stock market service for day and swing traders, come to my site for free, no credit card. Sign up for 2 weeks, basically 10 days, and enjoy the ride. And I think you'll really enjoy the level of intelligent traders that are in my room and people that really know what they're doing. And what's really beautiful is I can only follow so many stocks. There's 13,000 out there, but I have very smart traders, dozens of them that are always watching things and watching markets and saying, hey, this thing just popped when I didn't see it. And sure enough, it was a great day trade. And we gave our members insight into it before it really started to move. And so, again, come join us for free for 2 weeks and enjoy the ride.
Perfect. Thanks for you guys being here. As far as Option Professor is concerned, I do have a one-stop shop for people in the options area. We include education with an options class. We give ideas out every Sunday night. We also have coaching where I help you figure out how to do options. And then we have ongoing seminars each Tuesday. We actually have a seminar tomorrow on Tuesday. So if you want a one-stop shop with options and talk to somebody who's been doing it for 3 decades and more, go to optionprofessor.com or optionprofessor.com/alerts, and you can or shoot me an email. That's the easiest way, optionprofessor@gmail.com, and say you'd like some information, and I'll shoot it over to you. So anyway, you guys, Casey, very good to talk to you. We haven't talked in a while, but it's always good to hear from you, and Harry as well. And we'll do this again, and hopefully everyone can enjoy what you guys offer and benefit from it. And you can help them become better traders.
Okay, great.
Thanks, guys.
Thanks for having me here. Bye.
Okay, back to David now. Thank you very much, and thank you again, Casey, for being here.
You're welcome.
All right, thanks, guys. Yeah, great discussion for the week. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and or Substack or your favorite podcast app. Also, you can just go to TimingResearch.com and this the archive of this show will be posted as quickly as possible, and you can review any of the past shows and presentations there as well. And so just a quick just final thank you to my guests for the week, Casey Stubbs of freedomincomeoptions.com and Harry Boxer of thetechtrader.com and the Option Professor of optionprofessor.com. Thanks, everyone.